It's blowing up the headlines. President Trump orders Fannie Mae and Freddie Mac to purchase $200 billion in mortgage-backed securities. Let's chunk that down, though, and really best understand what you can do to take advantage of this opportunity. First, let's back up. Why is President Trump doing this? Because he is looking to bring affordability to the market. And when we think about affordability, it's two things. It's going to be the price of the home together with the availability of the home. So I guess this is three things, and the interest rate. By directing Fannie Mae and Freddie Mac to purchase $200 billion in mortgage-backed securities, the goal there is to bring down interest rates. Now, from an overall mortgage market perspective, it's important to know that the mortgage market is a roughly $9 trillion market. So if we think about $200 billion, while it's having an impact, and it will have an impact, the real question is longevity, unless there's more directive and additional funds coming at the interest rate solution. The point here is that yes, interest rates have come down, but honestly, they were already trickling down prior to this announcement from the Trump administration. This is just going to kind of juice it a little bit more and help bring that rate, in some cases, under 6%. So I think it's a perfect time that if you have been on the sidelines, whether you're a first-time home buyer and you want to purchase a home, or we have many of our past clients that already own a home and they have a low interest rate, but they just couldn't fathom an interest rate at 7.5% or 8%. Now that interest rates are hovering kind of in those high fives, low sixes on a 30-year fixed rate, you absolutely can take advantage of this directive in the mortgage-backed security purchase because it is bringing interest rates down. Now, the big thing here is this is so different than when our federal government did quantitative easing through COVID, and they've done it kind of on and off for years. This is different than that. And this has an ending point. Right now, it's just dollars. So it's $200 billion. And once Fannie and Freddie kind of run through the purchasing of the mortgage-backed securities on that, there could be something else, but there may not be anything else. So the time is of the essence because the mortgage markets are driven in part by supply and demand, but they're also driven by unemployment factors. They're driven by inflation. They're driven by global economic things that are occurring in the country, in the world. So it's never just one thing. And I struggle a little bit with this because I think the media gets it wrong a lot of times, and they mislead people to think, oh my gosh, it's here. This is the savior. We're all gonna be okay. Well, we are okay right now in the minute. But gosh, any headline, anything can come up later today, tomorrow, that can swing that mortgage market. So I'm sharing this with you is how do you take advantage of this? Well, you take advantage of this by getting your ducks in a row. If you are a homeowner, pull out that mortgage statement, take a peek at it. What's the loan balance? What's the interest rate? Are you paying mortgage insurance? What do you think your current market value is of your home? And then talk to a mortgage lender. They can help navigate whether you want to reduce that monthly payment, maybe eliminate mortgage insurance, maybe tap into some of that equity to pay for other things. There's a variety of strategies out there. But if you just pull out that mortgage statement and reach out and talk to a mortgage lender, they can help you achieve whatever goal that you have. Now, if you're a first-time home buyer, I'm telling you, this is the perfect time because depending on the market, and I'm gonna say every market across the country is different. I'm in Phoenix, Arizona. So in the Phoenix metro area, there's still a lot of opportunity. For the most part, kind of, again, gets back into location and all the other things. But there is a huge opportunity right now to negotiate on price of the home together with closing cost credit. So think about this. If you are in the market, you can take advantage of President Trump's directive to purchase the $200 billion because interest rates are lower. You may be able to get some type of credit towards closing costs, which would reduce your funds needed out of pocket to purchase the home. And then lastly, you just have a little bit more negotiating room. Now, that may not be the case in San Francisco or Connecticut or Austin, Texas, although I think Austin, Texas is very similar to Phoenix. So if you're there and you're listening, find a great real estate agent because they can help you achieve home ownership. The point is here, this is very opportunistic. This too shall pass. I've been lending for 30 years. 30 years this year, I know. I started when I was 12. But I'm sharing that with you because I've seen all kinds of real estate markets. And they all are very different. But the last time interest rates got low, and I don't know that we're going to get below 4, honestly. I think interest rates, for the most part, are going to kind of end in that stabilize, I should say, in that kind of mid to high fives. I think that's probably where rates are going to go unless something catastrophic happens again in this world like it did with the pandemic. When we have the winds turn in a real estate market, and it goes from a buyer's market where buyers have a little bit more control in the negotiation to maybe a neutral market where that is a buyer and a seller coming together and really trying to make a deal, to a seller's market where the seller calls all the shots. And that means the sellers are going to review all buyer offers. They're going to determine whether that buyer is somebody that they think can close on the transaction. Many times sellers in seller's market will want to increase the price. You might get into price negotiations. If you're doing a down payment assistance or low down program, you may not even be in consideration if there's multiple offers on a house. So that's why I just really want to get the word out that this is the time that if you've been waiting to buy a house, now is the time to talk to an experienced mortgage lender that can get you on track to achieve that home ownership goal. Interest rates are going to bring that payment down together with price negotiations. You don't want to miss this opportunity. And please do not try to qualify yourself based on what AI is telling you about the home loan process. That is not a good strategy. Call or text 480-725-0150 and a Kelly Zitlow mortgage advisor will hop on the phone with you. Spend 15 minutes, better understand what your goals are, your objectives, and we lend all across the country. No matter where you are, take the 15 minutes to be able to invest in you and your future to get the straight scoop. Because I promise you, AI is not going to know all of the nuances that it's going to take to get you to home ownership in that finish line. So again, reach out. We look forward to serving you. And whether it's us or anybody else, you do not want to miss this opportunity. It's historic.